We're pleased to have with us Matt Nieti, Managing Director, National Sales and Consulting, and Nicole Petrosino, Senior Vice President, Government Relations. Thank you both for being here.
Thank you.
Thanks, Sam. Thanks for having us.
To be here.
Look, we can't say enough about the fact that the CARES Act is so important to America, to our economy, but especially small business owners like our advisors.
Yeah, this is why I think we've been so focused on it and trying so hard to make sure we understood it well and we can help get into the hands of our advisors and, as importantly, their clients. I mean, our advisors make up 17,000 small businesses in our country, and they serve hundreds of thousands of more small businesses. And in order for us to get back on our feet, in order for us to bring America back to the strength and the beauty that we bring to the story every single day, you've got to support our small businesses. And that is what this provision, the Payment Protection Program, does within CARES. It makes sure that every single day our advisors are doing what they do, because ultimately that impacts the entire economy. It's why they were considered part of the crucial infrastructure. When the stay-at-home orders went into place, our advisors were told, please keep working, because Americans need their help. American investors need the help of our advisors more than ever. And I'm just proud to be a part of that and proud to get to join you guys and help it make it possible.
Well, so much is changing even since this became law March 27th. A lot of new guidance is out, and we'll certainly talk about small business assistance. But, first we want to talk about individual assistance. And Nicole, you and your teams are there on Capitol Hill working with lawmakers all the time. Can you give us the very latest on what has changed for the individual assistance program?
Sure. Now that the members are at home and they're not in DC, they actually have a little bit of, I wouldn't say downtime, but more time to connect. And so members are actually very optimistic about some of the steps that the government has taken to kind of fight against this pandemic's impact on our economy. And they know that those individual payments are essential. And so Secretary of Treasury Mnuchin announced that there will be a portal that's live now on irs.gov that will allow you to check the status of your refund. And it also allows you, if you're worried that the Department of Treasury / IRS does not have access to your bank account, you can go on there and provide that, because the administration, after hearing from the financial services industry, realizes that paper checks are just an opportunity for fraud, and that the most streamlined way for people and the most expedient way for people to receive their refunds is through direct deposit. And so that was a pretty exciting announcement for the administration to announce. And it's amazing what the government can do at what speed in times of need.
And some of those checks are already ending up in people's checking.
Yeah, as of Friday, that was the first deposits were made.
So let's talk about the small business assistance, because there's some changes and some clarifications there that are really important. So let's talk about the Paycheck Protection Program and some of the changes that happened there.
So as Matt is aware, they release an FAQ, frequently asked questions, pretty much every day, updating and fine tuning the implementation of PPP. And for advisors who are frustrated that they have not been able to get access to a loan, there are several reasons that's happening. It's a new program. The banks are trying to get up to speed. And the banks got clarification late last week that they would be able to use their own online portal and paperwork, which will actually speed up the process for a bank to process PPP loans. So that was pretty big news. And also PayPal, Intuit, and Square, non-traditional fintechs, non-traditional lenders / fintechs, got approved to be PPP small business lenders. So that's a tremendous step for advisors who are looking for access to a PPP loan. So now you can go to a non-traditional lender / fintech.
And so it should speed up the process. A lot of people have been wondering, why is it taking so long to get the loans and the application process? So hopefully that speeds things up a little bit.
Yeah, hopefully those two changes.
And Nicole and Sam, I think it's important too to note that, look, did it stumble out of the gates? Absolutely. But if we want to put this in perspective, the SBA does about $25 billion of loans annually on a typical year. And now they're going to push out about $350 billion worth of loans in probably less than a month. It was an ambitious, bold plan that I think we would expect to have kind of struggled out of the gates. But the reality is money is starting to get in the hands of small business owners, and we're seeing it flow, and that's exciting. And I think that's important, and that's what we should focus on.
Now, but what about the, recently, I mean, really, right, as soon as the act became law, there was talk that we needed more money because the need was so great. And just recently we heard about $250 billion being floated out there as a way to kind of help help the people get the money that need it. So what is the status of that, Nicole?
So I'm getting, the days are blurring together, so forgive me. So I think it was last Thursday, Mitch McConnell had planned to bring up a clean $250 billion PPP funding package that he assumed would pass the Senate by voice vote / unanimous consent, pass the House by voice vote, and that there would be additional funding for PPP starting this week. That did not happen. Speaker Pelosi and Minority Leader Chuck Schumer came out with a joint statement saying that they are not opposed to additional funding for PPP, but they wanted to make sure that smaller lenders, such as credit unions and community banks, got priority to those funds because they feel like the bigger banks have been doing the majority of the loans, and that those smaller institutions who have maybe not as sophisticated as a borrower are being left out of the program. That was one of the conditions, and that they also wanted additional funding for hospitals, states, and localities, as well as boosting the food assistance program. So those were their demands. The Minority Leader McCarthy and Majority Leader McConnell pushed back and said those things were funded under CARES Act. We have no indication that funding is running out, and so we are going to hold our ground, and we want a clean bill. And so, as of yesterday, when Secretary of Treasury Mnuchin was at the White House press briefer, he needed to leave early because he was still in negotiations with the 4 leaders. And so hopefully there'll be a breakthrough soon, because not only is the PPP program running out of money, but the EIDL, the Economic Injury Disaster Loans, are also running out of money. And so there's been a lot of questions about why the Small Business Administration, who is the lender for those, you don't need to go to a bank for those, you just go to the SBA website and apply for a grant, why the SBA hasn't stepped up and said, hey, we are also running out of money and we need additional funds.
So then let's talk about the PPP program. It's kind of hard to say sometimes. Let's talk about some of the other clarifications that we have there. So for example, if you do get a loan, you don't have to disclose that on your U form. That was a question we received from a lot of users.
We got that guidance from FINRA on Monday, and LPL's understanding was that these were not going to be disclosed, but obviously we needed to wait for official action from FINRA, and we were very glad to get that clarification in black and white. I think it was late Monday evening.
Yeah, and for clarification, it's that it's not reportable if the loan is actually forgiven. And I think the guidance from FINRA was, because the forgiveness is part of the original mandate of the loan, you're still in contract with and in good standing with the loan, and so therefore it is not reportable on the U4, which, like you said, a lot of questions, and I think that was a really great answer for us to get.
Another thing to highlight is we've been getting a lot of questions about when the 8-week period starts. When you speak of forgiveness, what does that mean? And so we got clarification on that as well from the Department of Treasury, that the 8-week period begins as soon as you get your disbursement from the bank. And as a lender, you have a mandatory 10 days to start distributing that money to your employees. So the 8-week period begins the minute you get your loan, and you have 10 days to start distributing that cash. So that was something else important to highlight.
And I want to go back to the forgiveness if we could, because there is some question about, like, are all loans forgiven? I mean, there are rules and criteria that apply.
Yeah, I mean, Nicole, feel free to jump in, but I mean, essentially, if you're using it for payroll purposes and you keep those folks employed over that 8-week period, as long as 75% of the money you take out of the loan, that will be forgiven, that 75%. Did I get that right, Nicole?
Yes, that's correct. I mean, it ultimately will be up to the lender. And so we're encouraging, I'm sure any advisor who's considering these loans, talk to a tax attorney, talk to your CPA, and be meticulous with your paperwork, because the lender will ultimately be the decider about whether your loan is forgiven or not. And speaking of loan forgiveness, some new news that we got earlier today is that I know some of our advisors were looking at the delay of the employer payroll taxes, so deferral of employer payroll tax. And we had previously been told that if you were going to do that, you could not do a PPP loan. The Congress was considering that double dipping. But as the program rolls out and the administration started to realize that it might take a week, 2 weeks, who knows how long to finally get your loan, being very realistic about goals, they decided that you could actually delay your employer payroll taxes up until the moment your loan is forgiven. And so that's new guidance for small business owners who want to do that in addition to a PPP loan, is you can delay your employer payroll taxes. You have to pay them back over the course of the next 2 years, but that can be an additional alleviation of a financial burden if you want to pursue that as well.
And do you think that we'll continue to see these types of guidance shift, I don't know, maybe to benefit the investor or the small business owner, because we start to realize what works and what can't work, or what would be helpful to get this economy going again?
Absolutely. I had one congressman tell me we did a year's work in 5 days. So putting this CARES Act together was a monumental task for Congress. The PPP loan program has only been in existence for, is it even 2 weeks yet?
Yeah,
So I think we're going to see a lot of nuances to the program. And I think the administration is going to be looking for ways to alleviate the financial burden on individuals, on small businesses, and ultimately what the PPP program does is to keep people off unemployment insurance and keep people employed.
Yeah, I think what's so critical about that too is it's not just financial assistance to keep people employed. It also makes sure that you've got the infrastructure in place for the rebound. When we do recover, when we do move forward, the last thing you want to have to be doing is restaffing, training, bringing on new people. And that's why, again, I will just kind of recommit that we have to not only make sure we're taking advantage of this to make sure our own advisors' businesses are in a good place, but I actually feel it's an obligation of our advisors to be speaking to every small business owner they possibly can. Heck, I called the local pizza joint down the street the other day because they make the best pies in town, and I want to make sure that they were ready to be on the mend. And so I think it is really critical that we're talking to every single person we can, whether they're a client, a prospect, a neighbor, a friend, to help them understand what's available to them to get America back on its feet. We are not healthcare providers, but we are financial healthcare providers. And I think I see it as our duty and as a real call to action for us to take advantage of the opportunities presented to us right now.
So what do you think is next? Because certainly it's not over. I mean, almost daily something new comes out. What is the next phase of all of this?
Okay, so let's say best case scenario, CARES Act 3.5, I think is what the DC circles are calling it. That gets funded. The Senate will be back in a pro forma session on Thursday. Let's say there's a deal that passes the Senate on Thursday, that passes the House on Friday. What's next? So anyone who's watched the president's press briefings know that he's very excited to do an infrastructure package. Pelosi had initially indicated that she also wanted to do an infrastructure package. But I think as Speaker Pelosi continues to look at the economy, I think she's thinking the next package will just be a redo of the CARES Act, right? The Democrats are pushing for more funding for hospitals, for state and localities. We've heard, Governor Cuomo, Governor Hagan, Republicans and Democratic governors saying that they need more financial assistance. There's going to probably need to be more money for unemployment insurance. And so I think those are going to be central to the Democrats' package. I think if the president had his way, it would be an infrastructure package with payroll tax cuts, deductions for business meals and entertainment, and a capital gains tax cut, in addition to all of those other things. So I think that Speaker Pelosi is probably right. I think those next things that President Trump wants to do will have to be further down the road. I think the next package will probably be something very similar to what we've just seen.
So, we didn't talk about it, but I do want to kind of go back a little bit.
Sure.
The unemployment rate, I mean, there's a lot of talk about, this amount that is going to be given to people who are now unemployed or find themselves unemployed. And it's very political, what people are saying about that. Can you give us some insight on what you think maybe will happen in this next phase of the relief package?
Yeah, so there was a little drama, as there always seems to be with these large packages. And before the Senate was about to pass the bill in its final form, a few senators looked at the language and realized that the unemployment insurance was basically going to be a $15 an hour minimum wage, which is not every state has that, right? It's going to be an extra $600 a week in addition to what the state has based for unemployment, which will be a significant amount of money for a lot of people. But when you talk to Chairman Grassley, who's chairman of the Senate Finance Committee, he defends it and says when you're unemployed, you have to pay for healthcare and all sorts of expenses that are not covered when you are an employed individual. We don't know how long this pandemic is going to last. And so he does not feel bothered by having that additional money. And the additional $600 a week ends July of 2020. So this is not a forever sort of benefit. This is only until the end of July. And then when unemployment is currently funded at $250 billion, when Congress comes back to renew that pot of money, I don't know if that $600 a week will be in there or if they'll make changes, because some of the concerns from the more conservative Republicans is that this could be a disincentive for people to work. If you were making more money on unemployment insurance than you were when you were working, there are some people who might not want to return to work, especially if there's some sort of still health fear without a vaccination. And so they were worried that it could have a negative consequence. But then you have somebody like Chairman Grassley who's like, Americans need this money now, and did not have a problem with voting for the bill.
Well, I know we've talked about a lot, and I want to give you the opportunity, both of you, to kind of have some last comments about what you think this means, CARES Act means for all of us, and then what maybe some of your hopes are for down the road.
Go ahead, Nicole.
Okay. So we talked a little bit about this when you first talked to me about the CARES Act passing, and I said I applauded because I love the bipartisanship. I hope and pray that in times of crisis that we will see more of that. It doesn't seem to be happening at the moment, but I really hope that Congress and the administration can come together in an optimistic, unified sort of tone when it comes to these packages, because, you know, people are hurting and in need. And I have to say, I'm very proud that how well our government is working. So whether you're Republican or Democrat, you have to be impressed by the speed of which Congress passed this bill, and the administration, in conjunction and partnership with our economy and small businesses and large banks, were able to implement this program. So something to be really proud of as Americans.
Yeah, I mean, I probably echo that sentiment as far as top down. It was a massive amount of work in a very short amount of time, with a geographically dispersed set of congressmen and women trying to get this done, and they pulled it off at warp speed. Was it perfect? No, but it was absolutely what I think the economy needed to stay stable. And what I would tell you, my hope is, yes, to continue that bipartisanship. I'm probably less optimistic on that side, but what I would say is that from a top-down perspective, we got what we needed. We need to have the bottoms up, and that bottoms up is both following kind of government and state orders, but also getting the economy back on its feet. And there are no people better positioned than the financial advisors who we work with every single day in the heart of America, in the heart of small business, to make that happen. And so, look, just if our advisors can get really well educated on what we're talking about here, they can understand whether it be the individual mandates, the retirement mandates, or the small business mandates, and help American investors figure out what's next, give them hope, and get them moving forward, then I think we can accomplish just about anything. And that's what I think we're going to do.
And the government is not going to let these programs run out of money. So there might be like a midnight deadline sort of flurry of activity, but the government will not let PPP or EIDL run out of money. So at the end of the day, it seems like Congress loves drama. These programs will continue to be funded for as long as necessary. I have faith in that.
All right, Matt, Nicole, thank you so much for your time and your insight.